In this video, I'm going step by step what I would do if I was a US service-based business owner and I had to build my entire tax strategy from scratch. So I have no plan for the year and I wanted to pay less taxes as I'm scaling my revenue. These are all the mistakes I'd avoid, what I'd prioritize first, and the exact sequence that I'd follow. So for context, I spent 5 years on a Fortune 100 finance team and saved millions of dollars in costs, and I've helped over 5 agency owners now save between 17 to 50 grand per year legally using a variety of strategies at my firm. So after everything I've seen, what works, what doesn't, and what costs business owners the most money, here's exactly what I would do if I had to start all over from scratch. So I'm going to be breaking this down step by step. There's 5 specific steps that I would take if I was building my tax strategy again. So the first thing that I would do is make taxes predictable. This is a huge problem that I see, and I think it would solve a lot more problems down the line if this was corrected. So most business owners, they don't actually have a tax problem, they have a planning problem. Every week, I'm talking with guys doing 500K a year, million, 2 million a year businesses, and this is a cycle that I see repeated a lot, and I need to call it out because until this gets corrected, nothing else is going to help. So usually during the year, what happens is they can't think about their finances. They're too busy managing clients, they're doing marketing, they're hiring team members, they're pushing hard to get more money in the door, and that's where all of their effort goes into. What happens then is as they're putting that effort into it, March and April come around, the tax bill gets revealed, and it's usually really high, and they can't stand it because there's nothing they can do to stop it. Anything that they could have done was in the previous year, but they were too busy during that time. No one was helping them. So now they get the huge bill. Once they pay it, then what happens is they just go back to running their business, and they're repeating the cycle every single year, and they're paying more and more as they start to really scale the business. No one's helping them with this. And one thing that's crazy is not one person out of everyone that I've talked with yet has been able to tell me at the end of this year, I'm estimating that I'll pay X dollars in taxes, which is even crazy to me. And it's even crazier that they don't have an advisor telling them this months in advance. Like, how do you not have someone that's able to tell you this in like September or October, what they're estimating you're going to owe for the year? That's just crazy. And it's really stressful when you're trying to plan around that, especially from a cash flow perspective. I mean, think about it. How can you plan around marketing expenses or hiring team members? What if you put aside, 50 grand in the bank for taxes, but you actually owed 100 grand? Now you got to find another 50 grand to pay in that case. Or what if it's the opposite? Say you put away $100,000 in the bank, but you only owe 50 grand in taxes. Well, now you just let 50 grand sit in the bank account the whole year and it's doing nothing. It's not earning you any money. So this is the mindset shift that you need. If you aren't focused on making taxes more predictable, you're never going to do the rest of these steps correctly. This would be my number one goal, is starting to plan ahead without surprises. This is the whole North Star of building a good tax strategy. So next up is I would fix my financial data. This is the number one mistake that I see repeated over and over again. It's really boring, but no one seems to correct it. So you want to build a tax-free business, you want a cash flowing asset, you want to exit for a huge amount in the future. That's definitely not going to happen if you don't fix this. So if you can't tell me what your true net profits are from your data, then you can't accurately tell me what you're going to owe in taxes because it's based off of your net profits. And then if you can't accurately tell me what you owe in taxes, you cannot build a good tax strategy because it depends how much you owe in taxes and it puts you in different situations. So it's a cascading problem here that starts from this. Now, I'll give you a recent example of this to illustrate it better. So I had a call 3 weeks ago with an agency owner. He's doing about 900 grand a year in revenue. On his books, it looked like he was only making about 80 grand in profit. So it was a smaller tax bill. He's not hitting too many tax brackets, but he made a big mistake that I noticed when I was looking through his books. There was about 200 grand he was counting as an expense, but it was actually an owner's draw. That's income basically that is taxable and it's not a write-off, but he's taking a write-off that isn't one. So my question is, does he pay tax on the 80 grand profit that he thought he had with his books? Or does he pay it on the 280 grand profit that he actually had that I found out about? This one fix, it's going to change the entire strategy because what you owe on 80 grand profit versus 280 grand profit is totally different and you need totally different strategies for each part. This is why with financial data, you really need it locked in. You got to trust your numbers. Everything that comes next depends on it and it won't work unless this is solved. The next thing I would do is that now that I can trust my numbers, I'm going to build an actual tax plan. And it's kind of crazy how many seven-figure business owners come through and they don't have any tax plan for the year. They're just winging it. They're filing taxes and whatever the bill is what the bill is. And that's just not a great way to build a financial or a tax strategy that becomes predictable and something that can actually add value to the business. Instead, it detracts. So here's what I would do to build a proper one. This is for if you're vetting, a new CPA, you want to audit your current one. What should you expect from them or anyone when you're building a real tax plan? The first thing is having liability projection. So your current year estimate of what you're going to owe and updated throughout the year, not just once in the beginning, not just once at the end, knowing it month to month, quarter to quarter. What am I going to owe through the year? What happens as it changes? The next is a 12 to 24 month roadmap. This is basically just a complete list of strategies that you're going to implement that's going to lower that liability projection number, which is going to give you a lower tax bill, and the sequence that you're going to be doing them in. Some strategies you should do right away, others you should take a little bit longer with. This will tell you what it is if you build a good roadmap. And then the last thing I would do is adjustments during the year. You can't just set and forget in January or February, and then it's going to be great the rest of the time. Ideally, you're updating it every quarter as your business and income changes. So basically, your tax plan becomes a living, breathing document, no different than your business plan or your marketing plan. You'll make decisions from it to lower one of the biggest expenses in your business. So if you're watching this and you're thinking, I don't actually have a tax plan, I just have a CPA who files my return, that's exactly what my tax savings assessment is for. I will pull your last 2 years of tax returns and your current P&L, project your liability for this year, and present you a 12-month plan showing you exactly what you're overpaying and how to fix it. If that interests you, click the link in the description if you want to learn more about that. Now, the next thing that I would do is I would first implement low-hanging fruit strategies. Once your plan's in place, you're going to want to start to build out what strategies you should start with, and these are the ones that you should do. They should be strategies that are simple to execute, no significant capital, and they have an immediate impact on your tax liability. Here's a list of different ones that you could think of. Things like QBI deduction, SALT caps, pass-through entity tax, maxing out retirement accounts, Augusta rule, using capital losses, maxing out your deductions, an accountable plan, depreciating assets. None of these are very complicated to do. They're simple, and you probably heard about them on social media, but they don't require a major investment or writing a big check, which is why I like doing them and having them in place. But I see a lot of agency owners and B2B service founders, they miss like 2 to 4 of these constantly and they don't have them in place. I actually had a client a while ago, a sales agency owner, found 17 grand in tax savings before year end 2025 using some of these alone. He was working with a CPA who didn't even have it in place for him. Just implementing the fundamentals correctly inside of the right structure makes a huge change. This is where most of your quick wins are going to live. So get these in place first before you think about doing any crazy capital allocation strategies, which is exactly the next part. So the last step, step 5, is I would look into capital allocation strategies. Once the low-hanging fruit is captured, you're going to look towards things where you can start to deploy capital into investments that are tax leveraged, and they create significant leverage on that capital, which you can use to offset taxes. These are going to be things like equipment leasing, oil and gas investments, bonus depreciation, charitable donations, opportunity zone investments, donor advised funds. These are things that can generate immediate deductions in the year of investments, and you can put 30 grand into some of these and get a 3 to 5x deduction against your taxable income. These strategies, though, they're a lot more complex. They require more planning. They're not right for everyone. There's a little bit higher risk profile that would want to do these. So if you're not comfortable with taking a lot of risks, you might not be interested in doing any of these. But for someone earning, over 400 grand in income, these are the highest needle movers that are going to save the most on taxes. And the reason these come last in the sequence is because they require capital and they require your structure to be already optimized, require books to be clean enough that you can actually project with confidence how much additional deduction you need. So everything that happened before has to be dialed in before you can even consider something like this. If you try to jump to these before step 1 and 4 are in place, you're going to be at risk of audits or problems where you might actually owe more in taxes than saving them. But if you do this right, these are the strategies that wealthy owners use to save 50K to over 250K in their taxes annually, like clockwork. So then on step 6, once you have all of that set up, I would build a quarterly review process. So this is the last thing I would build from a day one is a rhythm to your tax plan. So it would look something like this. So in Q1, you have your new year plan, you pay and file last year's taxes, and you start to think about for the current year, what do you want your plan to look like? What kind of strategies need to be in place? Where's the business at? What are the goals for the current year? In Q2, we're doing mid-year planning. So you make investments in this time and you're doing timing strategies. And in Q3, project the tax bill, any adjustments to the plan, and projecting the tax bill using year-to-date numbers. A lot of people miss out on Q2 and Q3 doing stuff for their tax situation. And it's a big miss, honestly, because this is the time where you're able to put strategies into place before the year ends. You're not scrambling and you're going to get probably your best results in these times. So really don't overlook these 2 quarters. And then Q4 is last minute strategies. So wrapping up the year and you already know what you owed months ago and you're just planning it for Q1 when you got to pay the rest of the bill. So you need this because business changes all the time. Revenue is going to spike. You'll lose a big client. You bring on a new team member. You have a month that changes the entire trajectory for the course of the year. And the tax strategy needs to move with it, just like any other strategy in the business. And each quarter, you should be asking yourself, where am I tracking for the year? What's my current projected liability? Are these strategies I still need to implement before the year end, or could I remove them? Has anything changed in my business that's going to affect the plan? If you build this process right from the beginning, you're never going to be caught off guard again by a tax bill. I promise you on that. You're going to know what's coming months in advance. And this is the difference between a tax strategy that just works on paper and one that actually works in your business. Two totally different things, and only one of them is going to get you the results you want. So if you follow every step in this video, I promise you will pay less in taxes. You're going to have more clarity over your finances, and you're going to stop being surprised every spring. This one especially is a huge win. You want surprises to not be a thing in your business so that you have a lot more peace of mind and calm running it. But I won't pretend that doing this alone is all simple. You need to know, which strategies are going to apply to your specific situation. You need to know which ones create audit risk if implemented incorrectly. You need to know how to sequence everything before year-end deadlines close, and you need books clean enough to support everything. That's exactly why I want you to click that first link in the description right now. If you qualify, I'm going to pull up your last 2 years of tax returns and your current P&L, project out your liability for this year. Then I'll show you exactly where you're overpaying and what it would cost to fix it. This is specifically for US-based agency owners and B2B service businesses doing 500K per year or more who are done writing big checks to the IRS and are ready to actually do something about it before the year is over. Click the first link in the description, book the call, and I'll see you there.